Live from Bloomberg's world headquarters in New York and streaming on Twitter, I'm Caitlin Glines.
And I'm Kriti Gupta, stepping in for Matt Miller. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, the chorus of crypto skeptics has gotten louder amid price volatility and regulatory scrutiny. We'll discuss the risks and rewards with investor Harry Ye of Quantum Fintech Group.
And teaming up with Elon Musk, crypto pioneer Adam Back talks the billionaire's takeover of Twitter and environmental concerns over Bitcoin mining.
And virtual land grab, we've got the latest on the Metaverse frenzy that caused disruptions across the entire Ethereum blockchain. All of that is ahead, but first let's get a snapshot of the market, and the best way to do that on your Bloomberg terminal, CRYP Go. That is your function. Have a few coins highlighted here, though. No surprise given the fact that it is a mixed risk picture today, Kriti. You aren't necessarily seeing a real clear signal coming from these digital assets, though you do have some lower, including Bitcoin, which is still trading in and around that 38,000 level at the lower end of the range it's been in really all year. Ether down a bit today as well, trading around 2,800. Solana, though, relatively unchanged, was outperforming a bit earlier on, but the big outperformance is coming from Monero. Of course, this is a privacy-focused altcoin. It had actually been underperforming the last 2 days pretty dramatically, but today it is up about 7.5% to that 213 level, though it really has been pretty consistently more volatile than some of the larger tokens out there, Kriti.
Yeah, Kaylee, now that we talk about the tokens, let's talk about probably the biggest cryptocurrency here, and that, of course, is Bitcoin. But I want to do it in the context of the macro picture. Of course, we know tomorrow the FOMC likely to come up with a 50 basis point hike, really to tame that inflation picture. But what asset classes served as the best hedge against that? We know Bitcoin for a while was called an inflation hedge for that reason, moving in tandem with those 10-year yields as that inflation was really getting priced into the market. But take a look at this. Going back about a year, you can see this white line here, starting to see the uptrend in inflation, and really the only financial asset class that's actually served as that inflation hedge. Well, it's been commodities. This purple line up here, Bitcoin, which was supposed to be that inflation hedge, moving in line with what the bond market was pricing in, really seeing that underperformance. The question is, does it redeem itself as we get out of this inflationary regime? Let's take a listen to the message on crypto from the Milken Institute of Global Conference yesterday.
The space has just become more trusted with more and more regulation happening.
Given the institutional increase in interest in cryptocurrency, I think it's reasonable to expect to see us be more involved in the crypto space.
Our own thinking is evolving very quickly. We're at such an early stage.
My guess is that, in 10, 20 years, we'll see a substantial portion of global GDP is actually happening in the crypto economy.
I'm still looking for that story as to how crypto has made the world so much better. I can give you the story as to how Bitcoin consumes as much power as a small country.
It's inclusive, it's democratized, it's global. And I just think that's going to be such a net good for the world.
If we're not lucky, regulatory arbitrage is going to take this market away from us.
Within this decade, we're going to have over 1 billion people in the world using crypto. And to me, that's just incredibly exciting.
Joining us now to add his voice to this conversation is Harry Ye, founding and managing partner of Quantum Fintech Group and a crypto hedge fund, of course, for high net worth investors. Currently, his network of hedge funds and private investments has Harry and his team managing over $2 billion in assets. He is here with us in the New York studio. So, Harry, thank you so much for being here. Given your focus on high net worth investors, I'm wondering how you're seeing their appetite for these kind of assets changing in an environment that is becoming less liquid, of tighter monetary policy and higher rates.
First off, thanks for having me on the show. It's great to be in the studio here. So to answer your question regarding, first off, liquidity, Bitcoin's still probably the most liquid asset out there that's being traded in crypto. And we're starting to see a lot more people really go into the space. So for example, if you look at the market cycle before Bitcoin, when there would be a big drop, right now this correction I think we've only had is roughly around 40% versus before it would drop about 80%.
Right.
And a lot of this bearish activity is actually started because of the Russian-Ukrainian crisis. And typically what we see in markets in May is the sell in May go away, and then we expect a bit of a market recovery in September. And we're definitely in the middle of a super cycle. So typically, when we're in the start of a super cycle where crypto becomes mainstream, you're going to shake out a lot of very, very weak hands. So you're starting to see that in the market now. And just as we saw in the last couple of days, was a huge amount of volatility in the market.
Are your clients seeing crypto as a hedge against some of these macro uncertainties that are out there, as a hedge against things like inflation, or are they seeing it as a riskier investment with the potential for higher returns. I'm just wondering what role it really serves within a portfolio for some of your investors.
Sure. So there's really, I think, three things that you have to look at. First is the hedge against inflation. The second is store value, and the third is utility use. So most blockchains out there provide utilities such as Phantom, Solana, Cardano, Ethereum, so that you can actually build applications such as decentralized applications on top of these platforms. So for example, USDT, Tether, Mai, which are all stable coins. So stable coins have essentially completely changed the way that we interact, even with dollars, because before you could only send money during the week, but now we can actually send money 24 hours a day, 7 days a week with very, very little friction.
Right, it never closes.
It never closes. So it's good and it's bad because as a trader, you're constantly running around the clock. So I never thought I kind of wish that sometimes, there was a market open and closed, but the reality is there's no stop because this is a global phenomenon.
Well, speaking of a global phenomenon, you mentioned Russia and Ukraine. We know that adoption when it comes to Bitcoin, especially in donations, crypto has really been a key means of the way to do it. But I'm curious, in the face of a strengthening dollar as well, do you start to see the role of Bitcoin and other cryptocurrencies kind of fade as perhaps a risk asset?
Not necessarily. I think you're always going to have that appetite for risk because right now you're just not getting these kind of yields that you would get from traditional bonds and equities, with the exception of equities such as Tesla stock, which has done relatively well. You're only really able to find these massive returns in the cryptocurrency space. So for example, last year, we invested in a layer 1 blockchain called Phantom, and it was at 5 cents, and now it went all the way up to, I think, $3.50, and now it's trading at around like 75, 80 cents. And another one that hasn't even been around for a year, Tomb, which is one of the projects that I took over in DeFi. So aside from just running a hedge fund, I also have a DeFi project called Tomb, and we're the #1 project on Phantom. And this one has pretty amazing yield opportunities for people that are just looking to park their money and earn interest and returns. So a lot of these platforms allow for us to innovate in financial spaces that we haven't traditionally been able to do, and it's always been kind of for like the select few. So this has actually been the exciting thing about crypto in this space. And we're launching a layer 2 on top of Phantom as well, so that's pretty exciting.
Yes.
So there's a huge combination between technology and finance, which is why I've been in this space for so long. And very, very exciting times.
Well, I have to ask, in the macro sphere, there have been a lot of calls for a commodity super cycle. For example, cryptocurrencies, well, they're not just currencies like the dollar, or they kind of have that other hat as a commodity as well. Is a super cycle for Bitcoin in particular in the cards?
Absolutely, because Bitcoin is the leading indicator. It's almost kind of the digital version of gold. So everything trades against Bitcoin. So when Bitcoin does relatively well, it's the bellwether for kind of how the entire market will perform. So we absolutely believe, I think there's over $2 trillion now in the cryptocurrency space. So Bitcoin's definitely poised to hit. My target's still $400,000, but
we're a long way off from that still.
We are.
You mentioned just kind of how the cryptocurrency space is growing and the intersection between finance and technology. I'm wondering about your view on institutional players, more traditional Wall Street firms and the like, getting in on that space and the competition you may or may not be facing.
Sure. So to answer your question, I think it's just a validation that traditional, institutional, and larger funds, they need to diversify out and they want to have access to crypto. This is one of the reasons we created 2 hedge funds, because there was nothing servicing traditional clients that wanted to enter the space. So I think you're just going to continue to see this. This is the new alternative asset class. It's not going away. It's here to stay.
And is there adequate regulation to continue to see this? Do you need more defined rules for the adoption to really
I definitely believe a good combination. I'm always a big fan of a light regulation, because you've got to have consumer protection, KYC, AML. Those are very, very important things to prevent bad actors. But definitely I would say light regulation helps guide and validates the technology and the product. So for example, Coinbase doing an amazing job. Adam Back, actually, all of these guys are our friends that we've kind of seen build amazing companies from the very, very beginning. So I think regulation just really validates what we're doing in the space.
Right. Perrier of Quantum FinTech Group, thank you so much for joining us. And of course, we will be talking to Adam later, so looking forward to that one. Adam Back, renowned cryptographer and co-founder of blockchain technology company Blockstream, is coming up.
And the SEC will add 20 more officials to a team dedicated to pricing crypto markets. Detail on Gary Gensler's drive. That's ahead.
And to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
I think freedom in all forms is worth defending, and crypto is a lot of it is about economic freedom, so freedom of speech is another version. I do think there's an opportunity for Twitter to essentially embrace using a decentralized protocol. And just in the way that you've probably heard of DeFi, which is decentralized finance, there's another one called DSO, decentralized social media, which is another emerging area coming up.
Coinbase CEO Brian Armstrong discussing the Musk-Twitter deal at the Milken Institute Global Conference yesterday. Joining us now is Adam Back, co-founder and CEO of Blockstream. Adam is part of another venture showcasing the aligning interests of Tesla CEO Elon Musk and Twitter co-founder Jack Dorsey. The three are working together to build a Bitcoin mining farm in Texas. Adam, so clearly you know both of these men who both have kind of stakes in this deal. Do you endorse Musk's Twitter takeover?
I mean, I think it's interesting to see kind of more neutral platform, some of the deplatforming has been controversial over the last few years. So it's good to see some new management and see where that leads.
And what's your feeling on this idea of decentralizing social media platforms like Twitter?
Yeah, I mean, I'm pretty interested in decentralization. My previous company to Blockstream actually was a startup doing peer-to-peer and file storage, actually. So I think that eventually decentralization is the answer, so that there's no kind of entity in charge that is pushed towards policy decisions.
I'd like to talk about the mining operations in particular, Adam, this idea of moving the farm to Texas. Well, I'd like to compare this to Russia, for example, a leading crypto miner in particular, a lot of that coming from cheap energy in Siberia. Do you think the energy grids here in the United States and specifically in Texas can actually handle that?
Yeah, I mean, Texas is expanding. It is bringing in a lot of new solar and wind power over the next 5 years. It's already scheduled. And for ourselves, we are actually building our own infrastructure as well. So that was the project we announced with Square and now Block, and Tesla providing the solar infrastructure, doing the installation, and providing the Megapack battery. And actually, that's off-grid power. So it helps prove our thesis that Bitcoin mining can actually fund power infrastructure for the future.
Well, given that it is energy intensive, we do have a viewer question here about how it squares with the ESG narrative and the ESG motives. Can you speak to that a little bit?
Well, I mean, I think ESG is, it's interesting. A lot of big companies have to pay attention to that, and policymakers, want to push things towards more green power sources. But ultimately, power infrastructure projects have to get financed, and for that to work, somebody has to have a business model. So our view is that Bitcoin mining actually helps the profitability and viability of infrastructure build projects. So that's why we started this one, and we're interested to grow it, potentially 100 times bigger with project financing that's ultimately backstopped by Bitcoin mining, bearing in mind that Bitcoin mining is a kind of always-on demand that will buy any excess power, where residential and industrial users move up and down during the day as people, come home from work or the work starts at a factory.
Yeah, so this is a really interesting thesis, the idea that you actually are in many ways helping accelerate a transition to green energy even as you are consuming it. But obviously it is a transition for a reason, Adam. We're not all the way there yet. And the fuels and energy sources we do have access to have gotten a lot more expensive, which has raised a question for miners in particular of just kind of margins and the costs that you face. Can you speak to that a little bit?
Yes, well, I mean, there are some advantages to Bitcoin mining. It can be in any location, so it can make use of stranded power. About 30% of global power generation is actually generated, but no immediate demand for it. So Bitcoin can soak up that, and it can do so in kind of stranded situations, so remote locations, for example. And of course, the other factor here is that a number of countries kind of the pendulum swung too far in ESG policies where they actually gave up, switched off, for example, nuclear power stations in Germany prematurely and actually reduced their power generation and damaged their power sovereignty, basically. So I think that a lot of countries are going to be paying attention to that now and therefore interested to see zero emission and green power infrastructure expanded and also renewed interest in building new nuclear power stations globally.
And obviously, you are seeing an opportunity in Texas, hence the joint venture with Block and Tesla that we have been discussing. Where else may there be opportunities for that?
Well, I mean, the Texas locations that have a quite high duty cycle wind power as well, so we may add some wind to the mix, which helps with the economics. There are lots of places around the world that are net exporters of hydropower. For example, Uruguay and Paraguay have large amounts of hydropower. The global supply of sort of ready-to-use power is quite high on the hydro side, particularly. For example, the Quebec province in Canada has unused, so ready to turn on hydropower that's equal to, more than the entire Bitcoin network. So the entire Bitcoin network could be powered by that province of Canada alone from already, established and constructed hydro dams. And of course, there's a lot of untapped, unbuilt hydro resources globally, as well as, wind and solar.
Adam, let's talk about the adoption of Bitcoin in particular. If we're using El Salvador, for example, as a case study, the first country to use it as legal tender, it hasn't really been picking up. What kind of time horizon are we looking at for the United States to see a little bit more adoption?
Yeah, I mean, I think that the people use Bitcoin for different reasons. So I think the US is more adopting Bitcoin as a savings, as an asset class for savings. For example, we saw the recent announcement by Fidelity to open up Bitcoin as an asset class to their multi-trillion retirement and fund business. So whereas emerging markets, it's kind of like, the cell phones where they never had fixed lines, so they skipped straight to cell phones, so they had high cell phone penetration. So for some emerging markets, they're underbanked or unbanked, or the local banks are rightly not trusted due to sort of solvency and corruption. So I think for the emerging markets, Bitcoin is interesting for remittances and domestic payments as a kind of backstop to unstable local currencies.
All right, Adam Back of Blockstream, thank you so much for joining us today. Now, coming up, we'll turn to the frenzy in the metaverse, how a virtual land sale raised millions and caused ripple effects across the entire Ethereum blockchain. That story's next. This is Bloomberg. This is Bloomberg Crypto. I'm Kaylee Lyons with Kriti Gupta. Now to some crypto stories that caught our eye this week. The Wikimedia Foundation will stop accepting cryptocurrency donations. The nonprofit organization behind Wikipedia said the decision was made due to environmental concerns. The shift is expected to make little impact on overall funding.
And the SEC is expanding its crypto and cyber enforcement team. It's adding 20 more officials to make a total of 50 dedicated positions. Chair Gary Gensler says they will now be better equipped to protect investors and crack down on wrongdoing.
And on Saturday, a sale of virtual land in the metaverse raised about $320 million worth of cryptocurrency in the largest offering of its kind. Demand for the upcoming project from Yuga Labs was so strong that activity related to the event caused ripple effects across the entire Ethereum blockchain, disrupting activity and sending transaction fees soaring. This is an interesting one, and for more on it, we're joined now by Bloomberg crypto reporter David Pan, who's here with us in New York. David, why were there so many people rushing to buy this virtual land in Otherside?
Sure. I think the record sale was largely driven by the cottage community that follows the Bored Ape Yacht Club collection of NFTs. And these buyers, they're betting on the positive prospect in terms of the value of these NFTs to go up and to appreciate over time as the franchise becomes more popular.
So how did the network of Ethereum itself get congested?
Yeah, so the record sale attracted a lot of buyers at the time on Saturday night.
Least.
Yes, and that created a problem for the network. It created the congestion on Ethereum due to the limited capacity of the network. So with the transaction fees went very high, and a lot of other users, the other people who are using other Ethereum-based apps, they couldn't complete their transactions and to, for example, make trades or mint other NFTs at the time.
So you said limited capacity. How does Yuga Labs and perhaps other platforms that need to address this, how do they address this moving forward?
Yeah, so one of the most interesting proposals from Yuga Labs that I've heard so far is that they might launch a blockchain that is different from Ethereum with higher transaction speed and lower transaction fees at the same time.
All right, David Pan of Bloomberg, thank you so much for joining us with your reporting on this story. And Kriti, this was an interesting one we were following this week because there were multiple parts in it. You have the metaverse, you have Ethereum and the blockchain, Bored Apes, which has gotten very, very popular, really just goes to show you kind of the cult-like mentality around so much of this. But the other story that we read as well relates to Gary Gensler bulking up his team around crypto at the SEC. And this is a conversation we've been having on the show for weeks now, the kind of turf war between the SEC and the CFTC and who really ultimately should have regulatory control over this asset class. Clearly, Gary Gensler's trying to deepen his bench a little bit.
Yeah, and let's just zoom out for a second. And you mentioned that kind of cult-like, frenzy-like behavior. I mean, we've been here before with the retail trade frenzy we saw over a year ago. So this is kind of interesting to see that now crypto is getting that same momentum. And all the more, you are seeing some of these authorities really bulk up.
Yeah, and it's no longer just limited to retail traders either. And this is a conversation we were having with Harry Ye, the fact that he focuses on high net worth individuals who want to be invested in this space, and also that he's starting to see more institutional buy-in as well. Major Wall Street banks, the likes of Goldman Sachs and Fidelity, adding crypto options to 401ks really goes to show you that broader institutional transition we are seeing here. So it's no longer just about people on Reddit and the retail trade.
Yeah, and you know, it comes at a time when a lot of people are looking for yield in a lot of different places, commodities, bonds with a negative real yield, stocks that don't seem to be catching a break. Is crypto the answer to all of those problems?
All right, well, that's a conversation and a question we will continue to seek the answer to. Thank you so much, Kriti, for joining me this week. And next week, Matt Hogan, Chief Investment Officer of Bitwise Asset Management, will be joining us. Same time, same place, 1 p.m. Eastern Time, Tuesdays on Bloomberg TV. This is Bloomberg Crypto.